Hello, everyone. Welcome to an Eltoma Corporate Services webinar. Please let me know if you can hear me properly. You can leave your comments in the chat box on the left. Um, You can also submit your questions on the chat box or send it to me by email. I will try to reply to as many questions as possible. Um, thank you for your attendance. Let's begin with today's topic. Today we're gonna talk about initial coin offerings, and I'm going to explain as well about the differences with token issuing, which is creating a bit of confusion among the cryptocurrency community. So my name is Alvaro Rivero. I'm legal specialist at Eltoma Corporate Services, and I will be presenting all of these general aspects of initial coin offerings. I really hope you find this webinar informative, and if you need any further assistance on this or other related matters, please do not hesitate to reach us. All right, let's begin. So the agenda for today is trying to find a definition for ICOs, initial coin offerings, and the differences between the actual users or investors and what are the consequences of each scenario. We're also going to talk about cryptocurrencies versus tokens to clear any confusion that may arise. We are also going to see try to differentiate the ICOs versus IPOs from the definition point of view. We're also going to briefly touch the legal approach, basically in the US, where it's mostly done in controversial, and also Singapore. Actually, the monetary authority has issued a few examples on the regulation for ICOs, and so we're also going to talk a little bit about that as well. So, what are really ICOs? Initial coin offerings have gained increasing attention by cryptocurrency users, the media, and the regulators. The rising price of Bitcoin, one of the most widely known and used cryptocurrencies, along with fraud scandals in different countries, have raised attention by the public and concern by the regulators. It is important for us that our clients and our professional team understand cryptocurrencies and ICOs to be able to make intelligent and well-informed decisions. Let's start addressing the definition of initial coin offerings. An ICO, technically and more accurately referred to as token launch. It is a vehicle to raise funds from investors and users alike. For the purposes of this article, we will refer to token launch or ICO indistinctively. I would like to stress the differences. An ICO, initial coin offering, has gained the type of name because of it's very catchy in terms of initial public offerings as well. So many users have been saying that they want to undertake an ICO process, sometimes even not understanding what exactly does that mean. Some people understand an initial coin offering as a way of just raising capital, raising funds very quickly, and that has actually gave a bad reputation to ICOs in general. It is a way of raising capital because, well, as many of the entrepreneurs listening to me right now know, companies have two ways of raising capital so far. One is financing, either going through a bank or a venture capital firm, and the other one is basically equity financing. So in both ways are taking a lot of time and costs. So many companies have actually taken the opportunity of ICOs to raising capital in a much faster way. So in initial coin offerings, how it works is basically a company is creating a specific cryptocurrency that is going to sell to the investors. So these investors are buying piece of equity basically on the company sometimes, which is why some securities regulators are regarding this as under the securities regulations and as an IPO basically. So many companies should be careful with that because that entitles some other types of requirements. A token launch, which is basically another way of you could say raising capital as well, but the utility of the token is much different than just the coin. The token can be used as a smart contract as well, and we're going to explain that in a little bit. But it's basically it's not for speculative purposes. It's not like an investor is going to buy the token with the aims of selling it in the short term and obtain a big profit on the token, but actually the intention of issuing the tokens is to use the platform and to have the token to perfectly just use it. Hello from India. Hello. Hello, Ms. Nipun. Just please should leave your comments on the chat box, and I will try to answer as many questions as I can, or either by email at the end of the presentation. All right, so basically going along the lines of types of users, as I was saying, there are important differences. A type of investor is speculative. Basically, these types of investors are only buying entering the ICO process for for the looks of a profit. Their own objective is to basically buy the cryptocurrency or the token and then thereafter sell it. So they don't really plan to use it. They just want to hold it for a period of time until the token raises its value and then sell it. And the other type of investor is basically the user. And this user is not entering this type of market just for gaining any capital or profit, but the user is actually intending to use the platform. And there are many cases, such as like Ethereum, which is a cryptocurrency, it's actually adding a lot of value to their users, and in many cases, not considered plainly as a speculative purpose. Like Bitcoin. Bitcoin, on the other hand, is being acquired for a lot of speculative reasons more than its proper use. So actually, I believe that it will succeed this bubble stage that is currently on, and after this bubble pops, basically the market will stabilize, and the Bitcoin will be more widely used, not only for speculative purposes, but actually for the proper use of the cryptocurrency. And it's very important to actually mark these differences on the white paper. The white paper, for those who don't know, it's basically the prospectus of the investment. It's a detailed information document with all the information of the company, what the company wants to do, wants to achieve through issuing either the tokens or the cryptocurrencies. And obviously, the regulators are going to have a look at the white papers and see whether or not, according to the white paper, it would mark into the securities regulations or not. So it's very important to have a very well written white paper, depending what the company wants to do. If obviously one is intending to just raise capital and issue equity or even voting rights into the company's matters, as a few cases already happened, like the Dow case that we're going to discuss in a little bit. If that happens, obviously the securities regulator will request the issuer to be compliant with the securities legislation. And for example, if in the US, it must be registered in the SEC, and also the prospectus or the white paper must follow certain requirements, which are quite expensive, so many companies are trying to avoid this. If the company is only trying to issue tokens for the utility purposes, then basically the white paper needs to reflect that very clearly. And we're gonna see a few cases where actually the regulator, in the case particularly is MAS in Singapore, has stated in which cases the regulation of securities will not apply, and therefore a company that wants to issue tokens doesn't necessarily have to be registered. So Differences between cryptocurrencies and tokens. A token, different than a cryptocurrency, can have different functionalities desired by the developer. For example, to execute a certain business processes automatically when an operational condition has been accomplished. This functionality is also referred to as smart contracts. Even though there is a wide debate regarding the denomination, as professionals in the legal sphere differ from the developers regarding the understanding of a contract. For the purposes of this webinar, we will regard smart contracts as computed conditions agreed upon the buyer and the seller of a specific token. Um, in other words, basically just to clearly explain, many tokens are operating on, they call it smart contracts, which is basically a new wave that we're going to see in blockchain as well. It's another type of use that we can have tokens, meaning the token will be issued today and the buyer is agreeing to certain conditions that will be met in the future. So basically, that is the agreement between the token holder and the token issuer. And once these specific conditions are happening, then obviously this will have certain effects between both parties depending on what they agree on. So that's the smart contract, and everything is done through basically the coding that they have encrypted. So there is basically little or no negotiation in this type of contract. And many developers have rapidly adopted a single format for the development of new tokens and have mostly agreed on using the multi-standardized token format under a template called ERC20 from Ethereum. This is a decentralized application on the Ethereum network, and this means that new tokens can be developed on the basis of the ERC20 and do not have to be built from the code ground up, allowing developers to develop alternative tokens faster than ever, and therefore the increasing amount of ICOs currently in place worldwide. So let's address one of the biggest confusions, ICOs versus IPOs. Well, many of you already know an IPO is a process to basically publicly trade a company, where the company is issuing shares and equity for financing purposes, right? So many ICOs have been trying to do the same, but in this case, the consequence is that the regulator is either asking the company to ordering the company a cease and desist, like in the US with the Dow case. I don't know if you heard about this case. It's very emblematic. It's the first time that the regulator had issued a complete report, an analysis of the how it tests and how the basically the DAO tokens that were being issued are considered actually securities and therefore need to follow the securities regulations, which actually meant to be registered under the SEC, which the DAO, this organization, didn't do, and basically the SEC ordered to cease and desist, and that is happening in a few other cases now, where the SEC is basically issuing an order to cease and desist any operations in the country. And the same happened recently last week in Malaysia. The regulator of securities ordered a cease and desist for a Singapore registered company. So basically, asking the Singaporean company not to engage any Malaysian citizens in the token issuing process. So that's why the Singapore company had to basically stop any operations in Malaysia or towards Malaysian clients. And so that is why it's very important to have the white paper very well written and to be able to assess very well what the company wants to do, either issue securities or utility tokens, as we said. I would like to just briefly tell you that in New York, for example, um, whether or not it's an ICO or not, if you are in New York or dealing with New York residents, it's necessary to obtain a bit license. Um, So the application fee alone for this license is $5,000, and investors said that to satisfy the criteria of the bid license has a cost of 50 to 80,000 per year. So this is leading to many startup organizations to move to other states or even outside the U.S. You can find the rules online. It's 23 NYCRR Part 200 virtual currencies. It's just a quick parenthesis our discussion. So the legal approach, as I said, the U.S. Through the SEC is regulating any type of ICOs or token launches that are actually regarded as securities. They have issued this DAO report where they explain how it is going to be analyzed, and what they do is basically take the Howey test. The Howey test is it's raised from a Supreme Court case where they actually analyze every investment operation under four types of under four factors of a criteria, which is one. Just a second, please. So the criteria of the Howey test is basically that it's not to encompass the ICO into an investment contract. So, but the SEC said that if the token issuing, it's going to here I have the criteria. It's one, an investment of money. Obviously, they have stressed that money can be in many different ways, either cash or assets or even any representation of value. So many companies have tried to avoid this factor by only allowing the purchase of the tokens through cryptocurrencies like Ethereum. Which in the Howey purposes is not going to be valid. So it's still going to be considered an investment of money. The second factor is the investment must be in a common enterprise. Uh, there is a subcategories of what it means to have a common enterprise. So basically, it all stems out to whether or not the parties are going to be related in any way. Um, and three, with an expectation of profits. Basically, that's the biggest point in conflict right now because many investors are entering the ICO market with the aim of earning a profit, and not many are entering the market just for utility purposes, which is why many securities regulators are regarding these tokens as a mean of security because they're aiming only for profits, not for the use of the token specifically. Um, and the fourth and last one is from the efforts of others. So if the platform of the ICO is going to actually do the trading on behalf of the users, then basically they are putting all of the effort, and the users are obtaining the profits out of the efforts of the trading platform, for example. In that case, obviously, it will be regarded to security in terms of the Howey test. But in the cases where the trading platform is just passive, and either any profit that the user might make is going to be through its own efforts and activity, then obviously the fourth criteria will not apply, and therefore it can be exempt of being under the regulations of the Securities Exchange Act and the Securities Act. So that's very important to take into account before entering an ICO. And in terms of Singapore, MAS has issued basically the same guidelines. They don't have, well, at least for the research that I've done, I couldn't find any specific case in Singapore yet. But the guidelines are the same, are going on there under the same principles of the Howey test, basically. So what they're saying basically is that in order to not apply into not enter into the securities regulations, either in the U.S. or in Singapore. What I personally recommend is that the offer is small and personal. In other words, having a pre-identified person with previous professional expertise or other connection with the issuer. Um, Currently, the regulators have the limit of offering to 5 million within any 12-month period. That's for Singapore, 12 million Singapore dollars. Two, that the offer is a private placement offer to not more than 50 persons within any 12-month period. And three, the offer is made to institutional investors only. Um, that's a big difference and also should be regarded as a key factor. And because if the offering is made public to anybody in the world, then basically it erases a risk and a red flag for the regulators. Whereas when the offer is specific to highly qualified investors and institutional investors and is not open for the public, then it's not something really that the regulator will worry about, and therefore it will not really apply the securities regulation. So that is very important. For the U.S. specifically, even though if they're not under the securities regulations, they do have to abide the KYC and AML regulations of the like the Patriot Act or FACTA. So that is something that you need to take into consideration if you're going to offer your tokens to U.S. citizens. Mm, let's go over the cases, which are very interesting and actually are it's an official statement of the regulator in Singapore to understand what's the thinking uh, behind them. So the Monetary Authority of Singapore has issued a guide, digital token offerings, where besides providing the regulatory framework, it also provides with a few examples of the application. On the first case, we find when the securities regulations will not apply. Uh, it's basically a company A plans to set up a platform to enable sharing and rental of computing power amongst the users of the platform. The company A intends to offer digital tokens or token A in Singapore to raise funds to develop the platform. Token A will give the token holders access rights to use company's A platform, and the token can be used to pay for renting computing power provided by other platform users. Token A will not have any other rights or functions attached to it. Company A intends to offer the token A to any person globally, including in Singapore. And the analysis is as follows. A holder of token A will only have rights to access and use company's A platform, and the right to use token A to pay for rental computing power provided by other users. Token A will not provide its holder any rights or functions attached to it, hence token A will not constitute a securities under the SFA, Securities Financial Act. So basically, it's the same. If the token is not going to guarantee any rights, voting rights, or equity in the company, then it will not be regarded as a security. Yeah. On the second case, we have a fundraising that will carry the obligation to have a prospectus under the securities regulations in Singapore. Uh, that is, company B is in the business of developing properties and operating commercial buildings. It plans to raise funds to develop a shopping mall by offering digital tokens, token B, to any person globally, including in Singapore. The token B will be structured to represent a share in company B and will be a digital representation of the token holder's ownership in company B. Company B also intends to provide financial advice in relation to its offer of token B. Obviously, here we have a direct application of the securities regulations and prospectus requirements. And Company B will unlikely require capital market services license for carrying on business in the regulated activity of doing securities under the securities regulations. Um, On the third case, we have an example of a collective investment scheme and its treatment. And the company, in this case, we have a company C that intends to offer digital tokens to any person globally, including in Singapore. This company C will pool funds raised from the offer and use the funds to invest in a portfolio of shares in fintech startup companies. And company C will also manage the portfolio, and the holders of token C will not have any powers relating to the day-to-day operations of the company or the management of the portfolio. The profits arising from the portfolio will be pooled and distributed as payments to the token holders. The purpose of this arrangement is to enable token holders to receive profits arising from the portfolio, and basically, obviously, from the efforts of others, which is company C. And along the same guidelines of the U.S., Singapore establishing this arrangement as regulator on the securities regulations. On the fifth case, we have an example of using a cryptocurrency as a debenture, where company E plans to set up a platform that helps startups raise funds from investors through digital token offerings. To facilitate the offerings, company E will set up one entity which will be used as a vehicle to make investments into a startup. For every startup that will make offerings, investors who wish to invest into a startup will provide a loan to the respective entity. In return, the entity will issue to the investors digital tokens that are unique to the startup. So, or token E. Token E will be offered to any person globally, including in Singapore. Token E will represent the rights of an investor as a creditor of the loan provided to the entity. Company E's platform will also operate in the market to facilitate trading of token E among investors using Company E's platform. In addition, Company E intends to provide financial advice to investors on the offerings. Token E will be a debenture and constitute a security under the Securities Act. An entity will need to comply with the prospectus requirements in respect of the offering unless otherwise accepted by the Singapore Securities Act. Company E, in facilitating the purchase or sale of token E on its platform, may require a capital market services license for dealing in securities under the Securities Act. And depending on the business activities that the entity undertakes on company E's platform, the entity may require a capital market services license for dealing in securities under the Securities Act as well. So basically, we see here how you can be subject to the securities regulations in Singapore. On the last case, we have an example of the treatment to a trading platform, where company F is planning to set up a virtual currency exchange platform that allows users to exchange virtual currencies, such as Bitcoin, that do not constitute securities to fiat currencies. In its initial years of operation, the platform will be configured such that trading of digital tokens constituting securities will not be allowed. This restriction may be lifted after a few years. On this basis, the company virtual currency exchange will not allow trading of any products regulated under the Securities Act. But when they lift basically the restriction, they will be subject to the regulations. It's also important to note that many organizations that are looking to that are in this business, the MAS has recognized and approved a regulatory sandbox where many companies can apply. Basically, if they comply with the following criteria, if they have an innovative technology, existing or new, and used in an innovative way, if this technology addresses a problem or brings benefits, if this technology has the ability to render the services in Singapore and subsequently internationally, if this technology has already undertook preparation of test scenarios and outline the expected outcomes, boundary conditions that are that sufficiently protect the interests of consumers and the industry, and basically what is the exit strategy. If a company wants to apply for a regulatory sandbox license, basically they will have to meet with these criteria. All right, so basically, we concluded with that, and that's all the information that we have so far in terms of ICOs. Obviously, as concluding remarks, it's very important to understand and and to have the white paper properly written. I have your question. I received your question in special mark. I will reply to your question. Yeah, then as soon as I can by email. All right. Um, so other conclusion is to basically differentiate the users or the investors into the market. Either they're going to be speculative investors or utility um, investors. Here at Eltoma Corporate Services, we aim to provide our client base with a personal, cost-efficient, and efficient service. Our client base has substantially and internationally grown over the years, yet we still retain our core values of professionalism, cost efficiency, and personal service. Our corporate services include company incorporation and maintenance, banking and finance, bookkeeping and accounting services, tax planning, IT and web services, software for business, web and marketing services, legal services, immigration services, license and permits. Licenses, especially in Singapore, in terms of ICO dealing and cryptocurrency dealing, and obviously the company incorporation in Singapore as well. We have now another project to help our clients, which is recruitment services, where companies can post their vacancies for free on our website. You can look at the website at eltoma-recruitment.com. And lastly, due to the ever-increasing importance of CFC regulations for business-related purposes in Cyprus, we have identified how we can help. And we have expanded our services to from portfolio into property. And we have a number of unique properties on the market in Cyprus for investment opportunities. If you wish to find out more about any of the properties on screen, you can do so by entering your email address in the chat box on screen, and one of our property ranges will revert to you shortly. Alternatively, you can visit at eltomaproperty.com. So thank you very much for your attention. Please do not hesitate to contact us either by phone or to info hyphen info at eltoma-global.com, and I hope to see you again in another webinar. Thank you very much. Have a good day.